Hello and welcome to India's Angels, a show that brings you a behind-the-scenes look at how angel investors and VCs function in India. I'm Shireen Bhan. This week on the show, we examine some of the strategies at play deployed by venture capitalists to make the entrepreneurial ecosystem in India more robust. We talk to Sandeep Murthy, who manages Silicon Valley-based Sherpalo Ventures India fund. Sandeep talks to us about the virtues of mentor capital and the necessity to be extremely patient. Also on the show, we meet Karthik, Reddy and Sanjay Nath of Blume Ventures, who are redefining angel investing in India with an institutionalized angel fund that has in 2 short years built a portfolio of 40 startups. Sherpalo and Blume represent 2 different generations of early-stage funds in India. While Sherpalo set up shop in India in 2006, it has invested in 11 ventures in the last 2.5 years. It hasn't made any new investments and it's been focusing on helping its portfolio companies scale up.
There was a 98 to 2001 period, which was a bubble. There was a 2001 to 2005 period, which was a desert, and nothing happened. Then 2005 to 2012 was the time of fundraising. It was not the time of building businesses. People just raised money. The metric of success was, wow, you got more capital. What will happen between now and then will be companies will be built.
And Blume Ventures presents a sign of the times with what it's been able to achieve. In the last 2 years, Blume has raised a 100 crore rupee fund purely from the domestic market, and it's already deployed about 40 crore rupees across 40 startups. Karthik and Sanjay believe this aggressive approach is all set to disrupt the marketplace. So 2 different approaches, both serving the same ecosystem. But let's start with the Sherpalo story. Set up in 2000 by serial entrepreneur and investor Ram Shriram in Silicon Valley, Sherpalo Ventures portfolio speaks for itself. Google, StumbleUpon, 24/7 and Zazzle.com. Since 2006, Sandeep Murthy has been investing on behalf of Sherpalo and Tyner Perkins Cofield and Byers in India. So far, Sherpalo has invested over $80 million in 11 companies, and once again the portfolio speaks for itself. InMobi, Naukri, Cleartrip, MapMyIndia, Paymate among others. With only some partial exits so far, Sherpalo's India portfolio has an unrealized internal rate of return of nearly 60%.
The challenge with investing, the type of growth we hope to create and the type of growth businesses that we want to be a part of, is you're trying to get the timing right. We're not able to time it as effectively as we would hope.
Sandeep Murthy believes that the most important thing he's learned from legendary tech investor and Sherpalo founder Ram Shriram is that the 3 most important things in the venture capital business are reputation, time invested and money, in that order.
You start off in venture capital and you say, okay, it's money. It's all about the money. You got to make money and you got to show returns. And you absolutely do. You absolutely have to create value. You absolutely have to deliver returns. And quite honestly, that's the biggest challenge right now in India. The Indian opportunity has taken longer to emerge and is taking longer than any of us started and hoped with or expected. So now we have to deal with that. So we have to figure out how to still generate the returns. But it's not just about the money, because this is a long-term game. You know, I will be doing this over the next 30, 40 years. So as a result, you know, trying to optimize the situation and risk a relationship or your reputation in one situation is going to hurt you everywhere else.
And this is the learning that Sandeep's brought to the founding team at Cleartrip.com as the first investor and first CEO. In fact, it was the Cleartrip business plan to sell air tickets online in India that piqued Ram Shriram's interest to invest in the tech space here and facilitated Sandeep's return to the country.
Serendipity is a big part of it. And so at that point in time, we'd moved to New York. My wife decided to take a break from work, and so she came back to India and spent, I think, about 6 weeks here. And in that process, she met one of the founders, who now my co-founder, from Cleartrip. And they were just chatting, and she said, he was saying, you know, he was at Thomas Cook at that time. So he was talking about the idea of building an online travel company. This was in 2004. She said, oh, well, you know, my husband works at IAC. They happen to own Expedia. Maybe you guys should chat. So we started chatting. We started iterating on the idea. And I went to Expedia and I said, hey, look, here's a great team. Why don't we look at this? Why don't we look at entering India? We'll have a very low burn. We'll experiment with these models. Everyone said, great idea. but we need some more time. We have too many other things going on. I think one of the questions is often about how did I meet Ram? I got introduced to him through a person who he had worked with many years ago. And I went with him with the pitch of, look, I think there's an opportunity to build some interesting businesses in India. He wasn't looking to invest in a fund. He wasn't looking to set up a fund. He wasn't necessarily keen to start building a business in India. But I said, look, here's the opportunity. Here's what I think makes sense. And first call I had with him was March of 2005. By June of 2005, I was in India investing on behalf of him and Kleiner Perkins.
Cleartrip began with a $3 million investment from Sherpalo and today has double-digit revenues and is one of the leaders in the online ticketing space. For the founding team, which came with an operational background, Sandeep's skills as a manager were the perfect fit.
So I think he brought along a lot of international know-how, best practice, stuff that we hadn't really been exposed to at that time. So that was very valuable to us. I think thinking around how to structure the company, but from a legal and sort of fiscal perspective, I think that was also very, very important. And I think the other thing, which at that stage and continues to be a big part of it, is really the creation of the board, the financial management of the company from a perspective of investors and understanding how to work with investors. So I think all of that was something that was very valuable to us. And certainly the remaining founders, we hadn't had a lot of that exposure. So having Sandeep available with that kind of experience was very complementary to what we were all doing within our own respective fields, really.
You don't just have one job. You have two jobs. You have to continue to stay relevant. Because the minute I say I'm a venture capitalist, I'm going to go sit in an ivory tower and hang out and tell everyone how to build their companies, I've lost the plot. Because the reality is the world keeps changing, keep moving, everything keeps moving. So the platforms have changed. So take it from 2005. My slides in 2005 were about PC penetration. My slides today are all about mobile engagement. One thing has nothing to do with the other. Now, I need to be in the mobile environment. I need to be around companies. I need to be involved in it. I need to not show up at board meetings and learn about the business. I need to be at that board meeting, engaged and understood what the issues are, and we need to be having a conversation that progresses the company at that point, not having a conversation that updates me about what's happened.
And this is the sort of thing Sandeep's been able to do proactively with Naveen Tiwari and the team at InMobi as well. Right from the time that Sherpalo put in money in Series A in 2008.
He had already dealt with scaling up Cleartrip by that time, and he came in and he brought in a lot of the thought process around how to scale an idea, which is what it was till that point of time, into somewhat of a real business, right? So pushing us on metrics, looking at the a slightly longer term strategy, because in the angel phase, as an entrepreneur, you're focused on the next 30 days or 90 days. You are focused on surviving. Now when you move into the venture space, you're looking at scaling, and that thinking is required, that change in thinking is required, which is where Sandeep was phenomenal at.
And InMobi today is as large as a new age digital economy startup can get. In 6 short years, Naveen Tiwari has built a mobile ad network second only to Google and has emerged as a poster boy of the industry. Sandeep Murthy believes India's new entrepreneurs have much to learn from the InMobi experience.
Venture works and the way startups work is you invest, you try, you fail, you iterate. And so the biggest thing is fail fast. And so we made the decision early on to invest in the platform. Because again, the logic was all the foreign players were going to enter this market. If we believed the market was big, they were going to come here. And the hurdles to coming to a new market weren't going to be that big, we felt. So we should build a really sound tech platform. What we got wrong, quite honestly, the ad market in India was too small. And that wasn't taking off. And telling you a story, coming back, there was a month where we were looking at the monthly burn, and we were looking at our cash balance, and we were looking at our revenue. And we're saying, uh-oh, we're in trouble. The traction wasn't there on the revenue because the ad market in India was small, the mobile ad market in India was negligible. So where were we going to get revenue from? And we were able to then take, we were actually building publisher relationships in the US who were asking us, if you're going to monetize India for us, could you please look at South Africa and Indonesia, and because no one's monetizing those for us either. Being a startup? Sure. The answer was yes, we'll figure it out. So literally the traction came in our business when we shifted to take on South Africa, and suddenly we saw the uptick from that market.
For Sandeep, it all boils down to the ability to be alert to changes in the drift and cautious when the bubble bursts.
So over the last 8 years, we've lived through up, down, and then up again. And in India, the interesting thing has been the bubbles are smaller and they pop a little faster. So therefore, the impact is less severe, which I'm happy with, quite honestly. So out of all of that, you know, one of the biggest learnings has been keep moving. It's funny, I have 2 young kids, so we watch this Finding Nemo, and there's this little blue fish, Dory, who keeps saying, you know, keep on swimming, keep on swimming. And so you have to keep on going. And it's actually very true, because the minute you stop, everything keeps going. I mean, everything else is going, you're stopped. And so if you're not looking for where that next thing is going to come from, or what to do to improve your business, or how to be prepared for the next shift, while also remaining focused on an end goal, keep building new relationships. That means keep thinking about where the opportunity is shifting to. Keep thinking about how new platforms are going to impact you. Keep thinking about, you know, what shifts are happening in other markets that might impact here.
And while Sandeep believes this is what an entrepreneur must do while running his business, he has a checklist for what an entrepreneur must think about before he approaches an investor.
What we look for is, are we in a large market? What we look for, do we have an entrepreneur that understands a market? You know, oftentimes you get people who come in, and an immediate red flag is if I've told you about your competition. You know your market better than me is how it should be. Oftentimes it's said that this whole investing process and relationship is like a marriage. It's you know, you're in it. You're now committed with this person for a period of time.
So is your market big? Do you know your competition, and are you willing to make your VC your partner? If your answer is yes, you know who to reach out to. On that note, we'll take a break, but on the other side, meet Karthik, Reddy and Sanjay Nath of Blume Ventures.